Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep our analysis on the gold market. So in recent couple of weeks, probably this sentiment start changing on the gold market since investors are losing interest to the safe haven assets due to the come down on the conflict on the Middle East. So the rate cut by the Fed has also been postponed on September approximately. So no reasons to be happy for gold traders for now. Long-term analysis that we have prepared today on the monthly chart and the weekly tells that retracement indeed could be deeper. So the first approximation stands in 31 area, but on the monthly chart we even could suggest a drop to the 3000 level. On a big scale, it brings no big changes to the overall dominant tendency because it's too large even for these swings. But on the daily intraday charts, it might be really significant downside action. Still, we suggest that the July and in general summertime will be rather bumpy. It's because a lot of events, Fed meeting by the end of the July, discussion of the debt sale, starting of the heavy negotiations on the tariffs with the European Union. Closer to the end of the August, we should get first fruits of the tariffs, Donald Trump policy in terms of inflation, and by some really tricky moment that's actually particularly in September, market expects that Fed should cut the rate. So the theoretical chance on deep retracement exists, but we will see how it will happen in reality. So because all these events usually brings lots of really surprises, and many things could go different compared to what market now expects. Speaking about the shorter term, if we take a look at the daily chart, here currently we do not have lots of reasons to take the new longs position because trend nominally stands bearish. On the weekly time frame trend also stands bearish. We do not have any bullish directional patterns by far. So chances that we will see this butterfly are melting day by day. If everything goes in this direction, then probably we should see market on testing 31 area, this support level that we already talked about. But at the same time, something interesting might happen around 3240 area. Why? So if we take a look at the fall time frame chart, first of all, of course, daily oversold. Just keep in mind this. On the fall time frame chart, we have this ABCD in progress, and particularly around 3246, we have the fib level. It agrees with the daily oversold. This potentially creates the background for a stretch pattern. Slightly lower, or maybe not slightly, but right around 3215, we also have the XOP target. That stands relatively close to the daily. So this area around 3220, 3240 might be interesting for some scalp long positions for counting on some bounce. Who knows, maybe something will start changing and actually this area will become the points where the butterfly starts forming the right arm, so right wing, so we will see it. But for now, I do not see any other interesting options on the gold market, at least for bullish traders, for taking long position here. On the hourly chart, also we see nothing really impressive. So this downside action probably might be treated as a free drive, 1618 free drive pattern, because this ratio here stands clearly 1618. Market passed the OP, and theoretically we could start upwardation earlier. So market stands around the OP level, this some kind of the free drive, but market hasn't touched the fib support and oversold. Personally, at least based on the previous market performance, I have some doubts with this, or better to say, I just suggest that this level has more chances to support market trend rather than this one. Because if you remember, around 33, we've got the confidence support area. this was accompanied with the OP, but even confluence support was not able to hold the market. Market still has dropped. So it means that market needs something else additionally to the fib levels, and that something might be the daily oversold level. This is reasons why I think that the market has more chances to drop to the 32.40, 32.30 area, and then start some reaction, rather than we'll do this right from this point. And that is just my view on the current situation. For a bearish position taken, well, currently it's also difficult to find reasons. Market stands at some support. Maybe it's better to wait for some response on the butterfly target, whatever it will be. Might the divergence here exist? So our previous ABCD patient 222 entry was good. So this is reaction. Now we should wait for something like this. If we will get it, that might be next chance for taking the short position next week.